how does a major global company not just, survive, but actually lead in this incredibly complex world we're in today?
That's a huge challenge.
Exactly. So today, we're doing a deep dive into a really comprehensive report from a world-leading multi-brand sportswear group.
Hmm.
Our goal here is to pull out the most important insights for you. Everything from their big picture strategy, their financial performance, what they're planning next, basically get you up to speed quickly on this pretty fascinating company.
We should probably say this source material, it's their detailed annual report. So it gives a really transparent look into how they operate and what they see coming in 2024 and, well, beyond.
Yeah, good point.
It's not just spreadsheets either. It really digs into the strategic thinking behind all those numbers.
Right. And the company we're talking about is ANTA Sports Products Limited, established way back in 1991, listed on the Hong Kong Exchange since 2007.
Stock codes 2020 and 8/2020.
Yep. And their mission is quite ambitious, bringing the transcendent sports spirit into everyone's life, their vision, to be a world-leading multi-brand sportswear group.
Quite the vision.
Okay, so let's unpack this. To really get where they're going, we need to look at the strategy they set back in 2021 for this decade.
That's the single-focus, multi-brand globalization strategy.
Exactly. It's kind of their guiding philosophy.
Right. So single focus, that's pretty straightforward. It's their absolute dedication to the sportswear industry. That's their sandbox. Then you layer on multi-brand synergy. And this is clever because it's not just collecting logos. It's about diversifying how they grow and, meeting all sorts of different consumer needs.
So they've got ANTA, FILA.
Zente, Colon Sport, and they recently added Maya Active, too. It's quite a portfolio.
Okay, but here's where it gets really interesting, I think. The multi-brand strategy isn't just the brands they own directly.
You're talking about Emmer Sports.
Exactly. ANTA Sports is the largest shareholder in Amer Sports, Inc. That's AS on the New York Stock Exchange.
And Amer owns some huge names: Arc'teryx, Salomon, Wilson, Peak Performance, Atomic 2. Really iconic stuff.
And Amer's IPO on the NYSE, that was just February 1st, 2024. It was a big deal. And Amer was a cornerstone investor.
Right. They put in about $220 million US for nearly 17 million shares. A significant commitment.
Definitely.
And this links directly to that third pillar, globalization. They're really serious about expanding beyond China.
Yeah, it seems like more than just talk.
For sure. They started heavily in Southeast Asia, but now we're making deliberate moves into the Middle East, North America, Europe, Africa.
Yeah.
It's pretty broad.
And they're using athlete partnerships too, right?
Yeah. Big names like Kyrie Irving from the NBA and Kenenisa Bekele, the Ethiopian long-distance runner. That helps build global recognition.
Makes sense.
Plus the physical stores. End of 2024, they had over 240 stores outside China. That's ANTA, FILA, Descente combined. It's a real physical presence they're building.
So underlying this whole strategy, they talk about their three cores. What are those again?
Right. The cores are competitive benchmarking, being consumer-centric, and leading by example. These are sort of the operational principles.
How does leading by example show up, like in practice?
Well, a great example we'll probably touch on later is their ESG performance. Getting that A rating from MSCI, setting those carbon targets that's leading by example in the industry, showing how they operate responsibly.
Okay, I see. So they've got this ambitious strategy rolling. The big question then is, how did it actually play out in 2024, especially with the global economy being, wow, a bit tricky?
Yeah, it was a challenging environment, but honestly, their numbers were strong. Revenue was up 13.6%, hitting RMB 70.83 billion.
Wow, over 70 billion for the first time.
Exactly. That's a major milestone, and it really speaks to the success of that multi-brand strategy in capturing market share, even when things are tough globally.
Any impact on profit margins, though?
There's a slight dip in the operating profit margin, yeah, down 1.2 percentage points to 23.4%. Still very healthy, but a slight decrease.
Okay, and the bottom line, profit for shareholders.
So this is interesting. If you look at profit without the sort of paper gain from the Amer Sports revaluation after the IPO.
Right, the non-cash accounting gain.
Exactly. Without that, profit still grew a solid 7.1% to RMB 11.73 billion. But when you include that gain,
Then what happens?
then the reported profit surged by 52.4%. It jumped to RMB 15.60 billion. So that Amer investment had a massive impact on the reported figures, demonstrating its strategic value.
That's quite a jump. Okay, let's break down that big revenue number. Which brands drove the growth?
Well, the core ANTA brand itself brought in 47.3% of the total revenue. grew by 10.6% to RMB 33.5 billion.
Still the biggest piece of the pie.
Yep. FILA was next, RMB 26.6 billion. That's about 37.6% of the total. And the all other brand segment, that actually saw a huge growth, 53.7%.
Wow, so the smaller brands are really picking up steam.
Definitely contributing significantly. And
Oh,
product-wise, footwear revenue grew over 15%, apparel over 12%, accessories over 14%. So pretty balanced growth across categories too.
okay, so top line looks great. You mentioned a slight dip in operating margin. What about the gross profit margin? Did that hold up?
Overall gross margin decreased just slightly by zero point 0.4 percentage points, landing at 62.2%. Still very high.
Why the slight decrease, though?
A couple of things. For the NTA segment, its margin dipped to zero point 0.4 points, partly because they sold more footwear, which typically has a lower margin than apparel.
Ah, product mix shift.
Right. And also, their e-commerce business grew substantially, and that channel tends to have a slightly lower gross profit margin too.
Makes sense. And for FILA, their margin decreased a bit more, 1.2 points?
Yeah, for FILA, they cited increased costs from product enhancements, investing in quality, and also proactively increasing the share of footwear, again with that lower margin profile.
So strategic choices impacting margin.
Exactly. Plus, they did increase spending on advertising and promotions. More campaigns, brand marketing, opening and upgrading stores. It's an investment in future growth, even if it affects margins slightly now.
Speaking of channels, that e-commerce growth is pretty striking, up almost 22% year on year.
Yeah, it's huge. E-com now makes up 35.1% of their total revenue. That's up from 32.8% the year before.
So over a third of their business is online now? That's a major shift.
Absolutely. It shows they're adapting really well to how people shop today. And operationally, things look solid too. Average inventory turnover days stayed stable at 123 days.
Which is good, means they're managing stock well.
Right. And average receivables turnover only went up by 1 day to 21 days. Also very healthy.
And for the shareholders, anything specific there?
Definitely focus on returns. They announced a big HKD 10 billion share buyback plan last August, and they'd already bought back HKD 1.28 billion worth by year end.
Sending a signal of confidence.
Exactly. And the board recommended a final dividend of HK 118 cents per share. That works out to a payout ratio of about 51.4% of their ordinary profit. Pretty strong return to shareholders.
Okay, so 2024 looks like a story of strong growth, strategic investment, even with some margin adjustments. Let's look forward now. What's the outlook for the next couple of years?
Well, they acknowledge the ongoing macroeconomic uncertainties. Things are still a bit unpredictable globally,
Sure.
but they seem cautiously optimistic about their mid to long-term growth. A big factor is China itself. It remains a really vibrant consumer market.
And government support helps there too.
Yeah, initiatives to boost consumption, promote fitness nationwide, that creates a supportive environment for a sportswear company domestically.
So they're sticking with that dual track approach,
Yeah.
China and global.
Exactly. Deepen the presence in China while pushing hard on global expansion. They've even defined 2 must-win campaigns for 2025.
Oh, what are those?
For the ANTA brand, the focus is on brand breakthroughs, diversifying products, and really strengthening its image in professional sports.
Okay.
For FILA, it's more about high-quality development, aiming for steady, balanced growth across both footwear and apparel. So tailored goals for each key brand.
Very targeted. And they have some pretty ambitious store opening plans too, right?
Oh yeah. The targets for the end of 2025 are significant. ANTA aiming for around 7,000 stores. ANTA Kids, maybe 2,700.
Wow.
FILA, including its sub-brands, targeting maybe 2,100 to 2,200. Descente aiming for 260 to 270. Colon Sport near 200.
That's a massive physical footprint expansion.
It really is. It shows a huge commitment to physical retail alongside their digital growth.
And speaking of digital, they're investing heavily there too. Something about an industrial park.
That's right, the ANTA Global Digital Intelligence Integrated Industrial Park. The idea seems to be to centralize and globalize resources for innovation, supply chain, logistics, creating a kind of high-tech backbone.
Sounds pretty advanced.
Yeah, the digitalization efforts are focused on efficiency, cutting costs, driving growth. They mentioned smart marketing platforms like their website handling 50,000 concurrent users, which is impressive. Also using tech for better inventory matching, leveraging AI. And their whole retail strategy is shifting a bit. Let's focus on just the number of stores, more on the quality.
Improving the store experience.
Exactly. Enhancing efficiency and the customer experience in upgraded stores, including those big iconic flagship locations. It's about smart retail, not just more dots on the map.
Okay, this is all fascinating on the business side, but there's another dimension where they seem to be putting a lot of effort, sustainability.
Yes, and their ESG environmental social governance performance is genuinely noteworthy. It lines up with that leading by example core value we mentioned earlier.
So what have they achieved?
Well, they're included again in the Hang Seng Corporate Sustainability Benchmark Index. Big news was their first-time inclusion in the Dow Jones Sustainability Index for emerging markets.
Oh, wow.
Yeah, they're one of only 6 mainland Chinese companies in that index and the only Chinese footwear and apparel company. That's quite an accolade.
Definitely stands out.
Their MSCI ESG rating also climbed to A. They showed improvements in some really key areas: sourcing raw materials, product carbon footprint, supply chain labor standards, chemical safety, labor
So
management.
concrete improvements.
Right. And they have that long-term goal, carbon neutrality by 2050. Their reduction targets are validated by the Science-Based Targets Initiative, aligned with the 1.5 degree C goal. Plus, they disclose Scope 3 emissions for the first time.
That's a big step in transparency.
It really is. It shows they're taking it seriously.
Okay, so with all this growth, global expansion, complexity, how do they manage risk and ensure good governance? That seems crucial.
Absolutely critical. The report states the board has overall responsibility for risk management and internal controls, and they have a dedicated risk management committee overseeing it all.
What kind of risks are they focused on?
They lay out a few key areas: strategic risks like economic volatility and the inherent challenges of going global compliance, understanding local markets, that sort of thing.
Makes sense.
Then market risks, adapting to how consumers are changing, different age groups becoming dominant, the rise of the female consumer, outdoor sports booming, plus just intense competition.
Always a factor.
Operational risks are a big category too. Things like improving customer experience, constantly innovating in R&D, fighting counterfeit goods, managing costs in different channels, rent, staff, e-com platform fees, and the complexities of a global supply chain.
Supplier management, logistics.
Yeah.
Yeah, that sounds complex.
And finally, management risks, basically finding and keeping the right talent, which is a challenge for any growing global company.
And the structure for overseeing all this, you mentioned the board committees?
Right. They have an audit committee, remuneration, nomination, risk management, and a sustainability committee. The idea is to ensure they have the right mix of skills, experience, and diverse views on the board to provide proper oversight.
Seems thorough. What about financial integrity, like the auditors?
They've had KPMG as their independent auditor since 2004. KPMG confirmed their independence for the report, and they do annual audit quality checks. The company also has a strict policy limiting non-audit services from KPMG to maintain that independence.
Okay. Now, one interesting detail often found in these reports is related party transactions. How do they handle that?
Yeah, they do disclose ongoing agreements with what they term family directors, essentially key figures often linked to the founding family, like Mr. Ding Shizong, Mr. Ding Shijia, Mr. Lai Shixian, and their associates.
What kind of agreements?
The report mentions things like supplying packaging materials that was about RMB 96 million in 2024 and providing master services, around RMB 29 million.
And this is all disclosed.
Yes, it's all publicly disclosed, reviewed by auditors, and compliant with listing rules. They also mention having a whistleblowing policy and procedures for handling inside information to maintain, as they put it, high probity standards. Transparency seems key there.
Right. So as we kind of wrap up this deep dive, we've really covered a lot of ground.
Awfully.
We've seen the strategic vision, that single focus, multi-brand globalization plan.
Right.
We've looked at the pretty impressive 2024 results and their forward-looking plans for more growth and innovation. And all of that seems underpinned by a serious commitment to sustainability and trying to maintain robust governance.
It really highlights the complexity, doesn't it? Operating a global multi-brand business like this is incredibly dynamic. Success isn't just about grabbing market share.
No, it seems like a constant balancing act.
Exactly. Balancing expansion with efficiency, growth with ethical operation, all while the consumer landscape just keeps shifting under your feet. It's what being a major global player looks like today.
So here's something to think about as we finish. As ANTA continues this mission to bring that transcendent sports spirit to everyone, how might their specific multi-brand and globalization strategies actually reshape the entire sportswear industry? And maybe, what surprising new partnerships could we see emerge as they keep pushing that global footprint further out?